Hey everybody, we did Paramount Global for our company. So yeah, let's get into it. So the company profile is an international mass media powerhouse located in New York City, or main headquarters. They have offices all over North America, in South America, and in Europe. Their market cap as of 2023 was 10.97 billion USD. They have three money-making segments, so they're split into their TV media, their film entertainment, and their direct-to-consumer. Their mission statement is to unleash the power of content. Their reputation and governance issues. I couldn't really find any governance issues per se. They're a pretty good company. They follow their environmental, social, and governance standards. They've released those for the past 3 years. It's just their guidelines to make sure that they're environmentally sound, socially conscious, and responsible within the organization company. The majority of the stockholders are other financial institutions, so it shows that they're kind of like a more of a blue chip stock and they're reliable. They cut their dividends by almost 20 cents per share in order to make up for their losses in their stock price they had recently. So it went from 24 cents per share to 5 cents per share. That ended up saving the company around $500 million. And then their regulations and business strategies. There weren't a whole lot of regulations that affected them since they're in the film industry. The most recent one that I could find was the Child Protection and Obscenity Enforcement Act of 1988, which essentially just outlined, you get some concrete rules for child labor laws within the performance industry, and then a lot of explicatives that they could release. So it kind of made them follow that a little more. And then in terms of the Dodd-Frank Act, there was a company called MDEX who was trying to invent a system where people could buy stocks on movies, kind of like futures. They would like buy ones that they thought they were going to do well or not. Dodd-Frank actually ended up shutting that down, and it became a part of kind of like the RICO stuff. So Paramount didn't end up having to worry about that, but they might have had to if Dodd-Frank hadn't come around.
So the financials, risk profiles, and stock performance section. Paramount Global generates revenue through a few different ways, starting with their TV segment. It brought in 21.7 billion roughly. Secondly, the direct-to-consumer segment generated around 5 billion. And then the filmed entertainment segment brought in 3.7 billion. And then as far as the assets and liabilities, Paramount Global's total assets were 56.561 billion as of March 2023. This is down roughly 2.55% from last year. And then going back to last year, total assets were 58.393 billion, which was also at a 0.4% decline from 2021. And then liabilities for the month were 34.218 billion. So this was a 1.9% decrease. And then for the year 2022, they're at a 2.4% decrease. And then for the stock price history, it sits at a changing price of 16.53 USD. And then looking back to last month, the price per share was roughly $22.3. So just the difference between that was around $6 just from 1 month. So it's at a steady decline, and they've been underperforming in the market due to their decisions to cancel certain programming.
So the industry and relevant competition, they're obviously Paramount Global, so they have their three media segments. They're TV media, film entertainment, and direct to consumer. Their current market cap is 10.97 billion, and in 2022 they did $30.091 billion in revenue. One of their other big competitors is the Walt Disney Corporation, obviously another international mass media corporation. They have a couple more segments. They have their media networks, parks and resorts, which Paramount does not have anymore. Studio entertainment, consumer products, and their interactive segment. Their market cap is obviously much larger at about 186.66 billion, and they did $80.72 billion in revenue in 2022.
Another big competitor is Warner Bros. They have 3 different segments, which is the networks division, the studio segment, and the direct-to-consumer segment. Their market cap was 32.71 billion, and their 2022 revenue was 5.5 billion.
The last competitor was Fox Corporation, which they had a couple segments too, which was cable network programming, television, and other, and corporate and elimination segments. The market cap was $16.4 billion, and their 2022 revenue was $14 billion.
Looking at technology, Paramount Global has already started using content localization, which is a form of artificial intelligence. Content localization is used to create specialized content for a specific region or international country. It's very useful in achieving viewers who are looking for that personalized content. Content localization can also just be as simple as changing the language to certain international countries. Paramount Global also utilizes computer vision technologies to accurately measure audience attention. They use facial recognition to extract predictive features in order to price out their advertising units. Paramount has developed machine learning products which lead to creative as well as financial business decision making. So overall, utilizing these products through artificial intelligence has one main goal, and that's to enrich the experiences of audience members by learning their personal requirements and diversity.
So looking at their growth, opportunity, and challenges, we looked over their SWOT analysis, which is the strengths, weaknesses, opportunities, and threats. So first looking at their strengths, their debt was well covered by their earnings. So total long-term debt for the quarter ending March 31st, 2023 was $15.613 billion, and the revenue for that 12-month ending in 2023 was $30.091 billion. So we see that the revenue covers the debts pretty well, which is good for the total profit. Another strength was the dividends is in the top 25% of dividend payers in the market. They have a dividend yield of 5.81% and paid 96 cents a share in this past year. Next, looking at their weaknesses, one of the major weaknesses was they made changes in their programs, so they ended up canceling a couple of their big programs, which brought in a lot of sales. So this was pretty devastating to their stock, which made them fall. And they also had an increase in streaming costs, and these both had an effect on the stocks with a 28% drop in the share price. Another weakness was investing into customer-oriented services and supply chain. So at times they put customer needs in front of their own, which at times make them lose profit, putting the customers first. Next, looking at opportunity, they have leveraging brand recognition in new segments. So with their name, it's a pretty well-known name, so they're able to use this into different segments to promote their new programs. Another one is annual earnings are forecasted to grow faster than the American market. Next, looking at their threats, paying their dividends but have no free cash flows, which just is pretty devastating. The free cash flow is the cash that's available after a company pays for its operating expenses. So their free cash flow is used to pay dividends and repay creditors, and when they don't have free cash flow and they're trying to pay the dividends, it's just taken out of their total profit. Another threat is Paramount receives a lot of criticism, mainly with programming choices, social issues, political correctness, sensitivity, censorship, and perceived negative social influence on young people. And how we'd add value to this company is trying to stand out from the competitors, which would be like improving or adding back in programs like we talked about earlier. They canceled out a couple of their big programs, so adding these back in can help stand out from competitors. Another one would be getting involved and partnering with different charity organizations. This could be something like helping out others, and this would help stand out from their competitors like Fox. Another thing would be discounted cash flow. This estimates the value of investment using expected future cash flows. If this discounted cash flow is higher than the current cost of investment, it could result in positive returns.
And then for our segments, we chose the institutions and markets. So for the first part, we focused on the 2008-2009 financial crisis and Paramount's response. In order to kind of make up for some of the losses that they had, they sold 7 TV stations and 39 radio stations. They acquired 3 more production companies to start pumping out content so they could bounce back. They sold Paramount Parks, which was just their parks division, for $1.24 billion, and that helped cover their massive stock price fall from March of 2008 to March of 2009. which fell from $23.18 per share to only $4.05 per share. So all this preventative work helped kind of bounce back from that.
The section I chose to focus on was the international finance and trade section. So, like I said before in the technology section, Paramount Global has transitioned from national TV broadcasting to international broadcasting through content localization. Content localization expands Paramount Global's horizon by achieving new viewers through that personalized content. And there are many different streaming platforms that Paramount Global is available on. These platforms are CBS, BET, Comedy Central, Paramount Plus, Pluto TV, MTV, Paramount Pictures, and a bunch of others. These platforms are offered in the US, Australia, Canada, Italy, Latin America, Germany, and the Middle East as a pay TV channel, as well as the Nordics, the United Kingdom, and Ireland.
So I looked at the policymakers and money supply, and I really focused here on inflation and how it affected them. And so in recent years with the pandemic, inflation rose quite a bit. As of September 2022, it rose to 8.2%. And so they had to figure out a way to make up with these inflation prices. And so the company ended up cutting 25% of their staff to make up for these the money that they were losing. And so there's just a significant amount of money they're trying not to lose.
That's our presentation.
Thank you.